It's been a while, boys. So if you recall last stream, obviously Bitcoin did eventually end up popping the top. And then one of the scenarios I talked about was if we started getting daily closes back below these previous highs, that it would be quite detrimental. And after we got about 2 daily closes below, the big red candle came out. So what's going to happen next? There's a couple things that can happen. One of the big things that I'll talk about today was this huge amount of liquidity that was resting down here. As you can see, we had a bunch of equal lows. A bunch of people had longs in the same spot. As you can see by the liquidation heat map, let me zoom out a bit so you can see it. A lot of longs got liquidated. So a lot of the leverage on the long side of the market is out pretty much. Of course, that chart is just a rough estimation, so it's not 100% accurate, but it's close enough. And of course, we can see the price action. So the next spot is down here where we have another set of equal lows. And before we get there, we could actually see a spike higher to fill short sells. So there's two spots that we can look to see as far as hedging against Bitcoin holdings or hedging against longs if you grab one today. The first one is there, which is a bit tight, and I'll zoom in and show it in more detail. And then the second one is there. Let me zoom in a bit and show you. So the exact same thing happened again, right? All of these, zoom out one more time, sorry. All of these highs were equal. So we knew where the short sellers were going to be. We saw the squeezing of the short sellers, but price wasn't able to hold it. As a result of that, we saw an imbalance of supply and demand. So we had enough shorts to pop the top, meaning when those shorts close, obviously it's going to be a bunch of market buys that execute at the same time. So a bunch of market buys execute at the same time, but there's not enough demand on the spot market. As a result, it dumped, right? And then we saw that happen again on sort of the lower time frames, which 4 hour isn't really a lower time frame, but lower than what the daily that we just looked at. So a bunch of shorts in the same area, betting that Bitcoin's going to go down. We take them out, so we get a flood of market buys. We're not able to hold it, so back down we go. And in both of these scenarios, you could see them as distribution, or however you want to define it. But the next time we go back to them, there's a chance that we're going to reject from them. So this one is there's a little bit lower probability, and there's two reasons for that. First off, it's in the middle of the relative range. So if we were to say this is the highs up here, these are the lows down here, this would kind of be in the middle of it, which has a little bit more randomness to it. The probabilities, while you can still gain an edge on the market, the probability isn't as high. Not only that, but your invalidation would be a lot tighter. So the previous area where everybody got sort of tagged out of their short sells on Bitcoin at these highs, the risk reward would be really good, but the risk reward being really good also means that the probability of it working out is rather low. And we'd look for the inverse of that. And I'll explain more in detail about what's going on in this micro range and what information we can gather from it. But an example like this, 4 risk reward, but maybe even more, because after we saw this imbalance of supply and demand at the top side of the market, it leads to the possibility of going under 80K on Bitcoin. So this short could actually be a lot more, depending on how you split your profit targets. And then the higher probability short hedge opportunity is at the top of the range. So where all the shorts got invalidated before, and then using a similar invalidation. You don't want to use exactly the high here, but somewhere close to it because of slippage reasons. If you're on a smaller account, you can use exactly the high, but on a bigger account, you have to account for slippage. So the risk reward in this scenario would be around 2.25, but it could be a lot bigger, just like this one could be a lot bigger. Depending on what happens. And that's where we want to see if there's any bearish fluidity. So there's a possibility that we go under 80K on Bitcoin, certainly after seeing that imbalance of supply and demand at the top side of the market. But now we want to see, what kind of fluidity comes out of the market. So if you're still bullish, which I'm not obviously 100% bearish, there's part of me that's bullish, part of me that's bearish. It just depends on what's happening in the chart and if there's any good trades to be had on either side of the market. But what you want to see here is sort of a mess, or if we are to see a rejection here, you want to see it sort of messy, because that shows that the bears are not fully in control. The same thing can be said at the top side as well, except this is a bit higher probability of it not being a mess, but it still could be. And in the event that it is, then this chart starts to look a lot better. But as it stands right now, obviously the chart doesn't look good. because of what happened right here. This is really important to pay attention to, because before this happened and we were sort of just bouncing in between this big range, it was really hard to tell what the true supply and demand was. But anytime, like I've said in the past, anytime you get a decent breakout of the range, then you get an idea of the supply and demand. To put it simply, if you're really bullish, the way I would put it to you is, if it was so bullish, why didn't this go up a lot higher? And why didn't it hold it, right? To eventually go higher again. But instead, based off the relative movements in the past, it was quite lackluster, meaning, it was a fairly decent high, but not anywhere as significant when we look at the previous price action of why this couldn't be more. It's usually just indicative of supply being heavier than demand, and what could have caused us to make a new high, even though supply is heavier than demand, is usually just a lot of people betting against Bitcoin at the same time, and then getting liquidated or invalidated on their positions and closing them, which would pop that price up. But then, of course, we didn't see enough demand, so that's a bit concerning. There is a road back to the top side, but we'd have to see what happens in a couple spots. So here and here, I can change my opinion on us not going under 80K, but I'd have to see a lot of things develop, because as it stands currently, unless the market starts to prove otherwise, unfortunately it does seem like Bitcoin does want to go under 80K. There's other caveats outside of the chart that could help Bitcoin, such as the S&P 500 and the NASDAQ pumping very significantly could end up bailing Bitcoin out. But as it stands, without assuming that the NASDAQ and the S&P are going to pump significantly, and just looking at the Bitcoin chart, fortunately, the probabilities of going under 80K have gone up. Now, I'm not saying it's guaranteed. As you guys know, these are all probabilities, and certainly new structure could be formed around here. And I'm going to zoom in here and show you what's going on, because there's some decent stuff developing that could point towards higher prices. But as it stands, I still need the chart to prove it to me. And again, these are just probabilities. There is still a probability we can go above 98K and back above 100K as well. It's just the probabilities are a little bit leaning towards under 80K at this point. But either scenario obviously could happen, and things can change in the chart. So let's have a look at what's going on sort of at the lower time frame. So we were just at the 4 hour, now we're at the 1 hour. So this is a pretty good sign. Like I said earlier, we took out a lot of the long liquidations that have been sort of dogpiling for the last month. So a lot of the longs that were open in January were invalidated fairly recently. So that's a good sign. The reason why that's a good sign is because when all of those longs got invalidated, which happened approximately right here, the price didn't do this. Because when everybody's selling or getting liquidated or invalidated on their longs, you run the risk of the price just plummeting. But the fact that that didn't happen is a pretty good sign so far. So it's starting to rebuild something here on the lower time frame. And then we want to look at the structure of it. So the retest has happened on the first tag. So obviously there's a lot of invalidations at the lows. People see this as a significant area. Price shouldn't fall below it. Price does fall below it. We see a ton of liquidations come in pretty much for the month of January. Let me lower the music a bit here. For the month of January, price doesn't fall off a cliff. Instead, it manages to regain. Then we get the retest of it. Okay, fine. That's a good start. So the next area we want to look for is right here. Ideally, we want to see some new highs before we test it, but something like this. And then the one after that would be here. So it would look something like this. If we get a rejection from here and we see good bearish fluidity, then we want to hold this. And then at some point we could test this again, but it's not mandatory. Either one could lead higher. But a rejection here would show good bearish fluidity and would only really be mitigated by showing good bullish fluidity after the liquidations came in from all of January's longs. And the reason why these areas are significant is because we held the first part of the structure. Now we want to hold where other longs got liquidated, or where you could argue accumulation started to take place. And those are the next two levels there for it. So We could just go straight through it, but in the event that we don't, there's an opportunity to actually grab your own long position if you're still bullish on Bitcoin at these prices, which even if you're bearish at Bitcoin at these prices and you have shorts open, obviously it's a good idea to hedge. So even if you're still bearish, I don't think it's a bad idea to look to bet against your short positions if you're heavily weighing on the short positions more so than the long ones. And then this kind of gets a little bit deeper into it, and we don't need to talk about it too much, but the next area for the bearish structure, which I have to zoom in a bit because it's a bit harder to see, actually lines up with right here. So this is a pretty pivotal spot. Certainly to pay attention to around 88.9 or around 89 clean, but it's not necessarily an area I'd look to take trades on just based off of the fact that the risk reward wouldn't be that good. So that's what's sort of happening on the lower time frame. We're starting to build a bit of a structure there, which is a good sign, but we're going to have to continue to build good structure because on the higher time frame, it's really hard to ignore the fact that this happened. Like I've said before and earlier, breaking out of the range and seeing a reversal like that shows a pretty clear sign of imbalance of supply and demand, whereas when we're looking at inside the range, like even what's happening right now, the picture isn't as clear. And even if we do start to see good structure develop inside the range, it doesn't take away the fact that what happened here. It does help the probabilities, obviously, if we continue to build good bullish structure on the more local, but it's still going to be really hard to regain market sentiment to be bullish because of the imbalance of supply and demand. Right? Everybody saw this happen. People were expecting a bigger move. It didn't come through. And so the market's going to be a little bit more skeptical going forward about these pumps actually, having some legs to them. So as far as the icebergs are concerned, liquidity is still deep. We got some icebergs setting up shop on the bottom side of the market. Some new one just appeared on the top side, but it's fairly new, so I'm not too concerned about it just yet. If it develops for longer, then it'll be more respected, but these ones have developed for a while. A lot of these icebergs have been here for nearly a week, so there's a good chance that they're going to remain there, even if the price starts to test them. Now, having icebergs there does not necessarily mean that it's guaranteed to pump, or that if it does dump, that it's going to reverse from these icebergs, because we've seen plenty of times in the past where price can run into them and still go through them, and that's applicable to the top side and the bottom side of the market. But as it stands, the bid side of the market is a little bit thicker, at least on Binance, in the more narrow range. But liquidity is good here, so deep liquidity, great sign, easy to enter and exit positions, and showing good liquidity. Like if it was super bearish, the markets would be a little bit even less liquid. So it's good to see deep liquidity, although obviously it's hard to ignore that there is an imbalance of supply and demand. So I'll come back to Bitcoin here in a second. Let's talk about legacy. So I'll talk about stonks, gold, silver as usual. What's happening on the US dollar? There's not much to report here on the stock market in particular, because we did have a bit of a correction that came in last week, but the market has rebounded quite nicely since then. So stock market still looks good, and since the stock market did go down last week, the volatility index spiked up, but ended up retracing that. So the stock market still looks good, and there's some other good developments happening that would lead me to believe that the stock market will continue to look good. And of course, this is a great sign for Bitcoin and crypto, as you guys know, because they're pretty coupled together. They're not always going to be a one for one, but if the stock market dumps, Bitcoin's going to dump a lot of the time, and vice versa is mostly true. But certainly if the volatility of the stock market goes up, it's going to happen to Bitcoin too most of the time. All right, so everyone's talking about the precious metals, right? Most of you guys know I've been bullish on the precious metals since last year, but they're still fucking going. I mean, it's hard to call when this thing's going to stop, right? I'd have to start seeing some serious market structure that would point me towards it stopping. And we've already seen that in the past happen on gold, like when it happened here. But then it started to build good structure again and actually holding where it needed to hold. There's a bit of a breakdown in structure right here, but it ended up recovering, which is a good sign eventually. gold went on to run again to new all-time highs. So it's really hard to call when this gold rally is going to end here. I guess I'd have to see all the bearish stars align to lead to the conclusion that this thing's going to stop. Eventually it will, right? No market goes up forever. Eventually it'll pull back. But as to when that's going to happen, it's really fucking hard to call, particularly where we're at right now, because there's really no signs of it. It could still happen, but I don't see any edge I can derive from this market that would point me towards it will happen. Maybe a massive dump on silver would cause gold to see some volatility. But as far as gold stands at this point, if you're trading it, what you want to see now is regaining these lows, because we're taking out the bottom side liquidity, so we're testing to see the supply and demand here. To make that simple, as you can see on the gold chart, and this is a fairly recent gold chart, by the way, this is the last couple days, this sort of consolidating we've been doing here, our last day. But we had equal lows, so people that are leveraged into gold at the last second, sort of buying the top with leverage, just got flushed out in this last 7 minutes. So now we want to see, can it regain it? It's fighting for it right now. If it can regain it, then we'll go to the top side and take out all the high leverage shorts that are coming in. And then if that fails, then we can talk about a deeper correction. But until then, we have to see what happens here. First, we want to see what happens here. If this holds, which it looks like it is, the next step is to go to the top side and see what happens there. But gold still looks good. Silver still looks good. This is a 15-minute chart, so this looks pretty detrimental. But there was a dump that came in the last couple hours on silver. However, when I zoom out, the dump seems relatively small, right? So, same thing with silver. Unless we see even more volatility hit the market, which we might see today. I mean, it's last couple hours a pretty sizable reversal, but I mean, that's happened in this rally on silver. It's hard to say that it's going to stop. The rally is going to stop. It looks like it's going to continue until we see something major develop. Even big volatility, silver has rebounded quite significantly. So I told you guys, this silver rally has been brewing for decades. This has been in the sort of the slow cooker for decades, and it finally started to pop off. And now it's a question of when is it going to stop? And you guys, no, I don't like to call the exact top because I don't think very many people can. And even if they can, I think they got lucky a lot of the time. Maybe not, but I don't think it's advantageous to try and call the exact top. I'd much rather grab like the lower high, like something like here. I don't want to grab this because it could go a lot higher. But once we see that sort of volatility slam the market hard, then there starts to be opportunities to sort of go in there and look to short any bounces. But until then, it's obviously more likely that this up arrow is going to continue. So the dollar sort of got fucked yesterday. A lot of the structure broke down. We saw the yen pop up, and there's a lot of speculation going into what's happening between the relationship between the yen and the dollar. Obviously, the Japanese central bank is looking to raise rates while the Fed Reserve here in the States is looking to lower rates, which is going to make the yen more of an appealing currency to hold than the dollar. This is sort of one of the last legs for the dollar. I'm pretty unhappy that we weren't able to at least take out 102, which was the area to look for. But there's just a big rotation happening from dollar to yen right now. And even if the chart looks semi-good, it's kind of hard to stop that stampede that's coming in. So we'll see what happens here, but if we don't see the dollar start to turn around this week and start to regain this, then yeah, there's a chance we could go under the lows that we printed in September and in June, which was right here and here. So we'll see. We need to see a comeback on the dollar this week. Any more weakening of the dollar this week would lead to something that could be detrimental. Of course, we don't know, because once we go below this low, one of two things is going to happen, right? We're going to see an imbalance of supply and demand where the low isn't that significant, and then the dollar can still make a comeback, or we run the risk of something like that happening on the dollar. So even going down here below these lows, you sort of get the frenzy that comes in of panic and fear, because a lot of people think the dollar shouldn't go lower. It's bounced off there multiple times. The probability of it going below there, a lot of people believe is not high, and so when it does, it's sort of panic. And if there's not enough demand to match that panic, then obviously the price is going to go down until it finds enough demand, and that could be pretty brutal sometimes in some markets. So we'll see how it plays, but this week we want to see the dollar do good, because if not, it means that it's not only broke some structures, but it's not rebuilding them. This week would show some rebuilding of those structures, which could lead to rebuilding of bigger structures, which could lead to eventually the dollar rebounding. But until I start to see the smaller structures rebuild, there's the confidence that the bigger structure is going to be rebuilt is not that high. You guys know the plan for oil. It hasn't changed. Let it pop up more. I still don't think it's popped up enough to start looking for shorts. It could run a bit more before we start to look to add on to shorts, or look, if you don't have shorts, to look to open them. The only thing I can see for oil right now is longs, but you guys know I don't like longs on oil right now because of the running the risk of it just collapsing. If you really had to trade on oil and you were forced to open a position on oil, yeah, the only thing I can see is longs. But again, I wouldn't be holding them for a moonshot on oil or anything like that. It's possible, but I don't think it's a very good approach. Who knows? I could be wrong, but. So the yield, this is good news. The yield, the 10-year yield, finally is starting to go low again. I was a bit concerned because with the rates dropping, we should see the supply and demand sort of mechanics that were affecting the bond market usually means that the yield and the rates are pretty closely tied together. There's a little bit of a lag and they're not completely perfectly correlated, but with having the rates drop, you'd want to see the yield drop too. Seeing that inverse correlation was a bit spooky and definitely had me a bit worried, but as I see from the chart here, it looks pretty good. It's the same thing like on Bitcoin, right? If we see this thing drop back below into this range of around, from around 4.1% on the 10-year, then we should be smooth sailing on the correlation between those two, which still shows that even though foreigners are selling U.S. bonds, the bond market is still in a good spot, because we were definitely running the risk of the bond market getting a bit crazy, and the ramifications of that is it could affect every market, including crypto. I think most of you guys are here for crypto, so I'll try and keep the legacy talk. I'll try and be quicker about going through all this, the equity market, but Tesla obviously made that new all-time high. It wasn't very significant. We've seen the correction. I don't really like the rebound here. I would have preferred the rebound to happen around 411. Around 411, because this is the proper fluidity, but now we run the risk of options traders having invalidations just below accumulation, which means if we don't see something like this happen, which I'm granting it a little bit of leniency because it can slide into liquidity because of the options traders being invalidated. So we could dip down to like 400 or something, and that would be fine. Even a little bit lower would be fine, like 390 would be fine. But if we don't see a strong rebound here, then Tesla could have a much deeper correction. Of course, that could affect a lot of the other Mag 7. Even though it's not that big of a market cap relative to the other Mag 7, it still has a huge options market. And of course, that leverage can affect as people try and add margin using other investments in the Mag 7. So Apple, pretty good fluidity at the top from the bears so far. It's still maintaining decent fluidity. We'll have to see how that goes, but it's obviously having a good day today. A lot of the Mag 7 is, but you guys know how I feel about Apple. I think it's maybe a little bit overpriced, but maybe I'm wrong about that. Amazon still looks good to go higher. Google looks good to go higher. Nvidia still looks kind of toppy to me, but it's fucking Nvidia, so who knows? Even though the structure doesn't look that great, it'll probably still pump because it's Nvidia. And Microsoft looks good to me as well. So that's an update on Legacy. Let's talk about Ethereum. Before I do that, let me catch up on the chat. What's up, Latvian? Blowfin good? I think it's pretty good. Silver is the best performing asset, yeah. I mean, everybody's talking about silver right now. Marble session, yeah, we should be able to play marbles today later. Isn't longing oil not good since Trump wants the oil price to be low? I mean, yeah, maybe, but I just go by the chart. I mean, I'm bearish on oil. Like I said, the only, if I had to open a trade on oil right this second, I'd be leaning towards longing over shorting, but that doesn't mean that I'm bullish on oil. It just means that it would be sort of a swing trade or position trade at this point. I don't even a scalp, honestly. But as far as like a long-term holding with a far-out expiry on a contract, maybe, but I don't really see that as the play right now for oil. It could still happen. I just don't want to risk it. Still trying to figure out who got into my account and forced me to trade oil. So, what? I'm guessing Ludwig is short on oil and Bugatti's long on oil right now. What's up, SARS? All right, let's talk Ethereum. So this is really unfortunate on Ethereum. And let me, before we do that, let me open up Bitcoin on the side here so you guys can watch the price action on the 1 minute happen while I talk about this. So we're zoomed into Bitcoin just so everyone knows we're on the 1 minute. I'll leave that over on the left, but let's talk about Ethereum. So again, this is pretty unfortunate because Bitcoin showed an imbalance of supply and demand prior to Ethereum stacking these equal highs. So we had equal highs on Ethereum, and the dump that happened here was when Bitcoin was right here. So when Bitcoin was here, we saw an imbalance of supply and demand, pretty sizable dump that came into Bitcoin. And I've told you guys a million times, they're not decoupled from each other. If Bitcoin dumps a lot, unfortunately, Ethereum's going to do the same, and that's applicable to all the altcoins for the most part. At some point in the future, we could see a decoupling happen for a couple months, and we'd see insane rallies come out of the altcoins. That's a possibility, but as it stands right now, that's not the case. I think we're getting closer to that being a higher probability, but it's still not the case. So obviously, Bitcoin dumped, and then unfortunately, Ethereum was in a good spot to actually pop the top here, similar to what Bitcoin did, but we needed Bitcoin to actually hold, and unfortunately it didn't. So one of the big reasons we saw the Ethereum dump come in, because Ethereum did have high time frame equal highs. So now we're at the lower range of Ethereum. We took out a lot of liquidity, similar to what we did on Bitcoin. It's starting to regain and build some decent structure on the local, similar to what Bitcoin's doing. In fact, actually, Ethereum looks a bit better at rebuilding its local structure. That's a good sign, but we still have to pay attention to the fact that we have all these equal lows on Ethereum in the same spot, which is still pretty fucking spooky. Because, you know, if they had longed Ethereum since the middle of December or late November, their invalidations are all going to be at these lows, because after we saw this move, all the invalidations here got taken out, all the invalidations here got taken out, even up here. So everybody who longed it in the middle of the range got taken out, whereas people who are still stubbornly holding on to Ethereum longs would force their invalidations either at the lows in late November, middle December, or even now today, the new longs being opened are all going to share the same invalidations. So that's spooky, but the good news is the same thing can be said to the other side of the market. You know, if they had shorted Ethereum since early December or the middle of January, then their invalidations on that side of the market are pretty straightforward. So what this allows us to see now is we're going to have an imbalance of supply and demand. Either it's going to be on the bottom side or the top side, right? And then we can react after to see if there's an opportunity. So whether we pop the top first, one of two things is going to happen, right? We're either going to rally or we're going to fail it. If we fail it, then there's an opportunity to go for the lows. Or if we go for the lows first, then there's an opportunity to go for the highs. Or if it holds it, then go a lot lower. So in either one of these scenarios, if you're looking for an opportunity, you want to see a reversal. And unless we see Bitcoin, you know, show up in a big way, that's probably what's going to happen here, because we haven't had too much volatility in Bitcoin lately. But either one of these scenarios could provide a potential opportunity on Ethereum. As it stands right now, for the more aggressive opportunities, it's the same, relatively same as Bitcoin. You want to see this rebuilding of structure that's happening on the local, just right here. And then seeing it hold the next area. So let me zoom in a bit so it's easier to see it, but it would technically be here and then here. So you want to see sort of a reversal, hold, pop the top, hold, and then you can really go for it on Ethereum. There's even more aggressive stuff if I zoomed in, but it's the same kind of logic. Look for the same thing. Where was there liquidity? Because a lot of people did the same action at the same time. Did the price reverse? Was it not only did the price reverse, but was it a significant falling? So like, how do I put that simply? This was the lows. We took out the lows, but we didn't see something like this. right? Relative to the previous movements in the past. So I would say this is a pretty insignificant low. Now that we've held it, we look for the retest. If you didn't grab that one, then you wait for the next one on the structure, which is here. If you don't grab that one, you wait for the next one, which is here. And then you try and pop the top. And then after you've popped the top, then you could see a reversal to start to look to cover for hedges. So then you'd look for that. And then you'd look for that. Something like that. I don't like to speculate this far into the future, but that's sort of the approach that you would look for. And if it doesn't reverse, then you just let any profit targets you still have open from any one of these longs continue to run. What's up, Tom? But yeah, that's sort of the more aggressive stuff on Ethereum. And again, you can get even more aggressive if you want to zoom in, but it's still at the mercy of Bitcoin on the high time frame at this point. The good news is, though, ETH Bitcoin's still holding. So this ETH Bitcoin structure is still holding, regardless of all the dumping that we've seen happen on Bitcoin. And even today, you can see that Bitcoin's up, almost 2%, but Ethereum's up 4%. These are a good sign. I mean, when they both dumped, Ethereum dumped a little bit more than Bitcoin, so that's pretty normal. Ethereum's going to be a little bit more volatile. But we've definitely seen scenarios in the past where, Bitcoin will dump, Ethereum will dump even more than Bitcoin, then Bitcoin will pump, and Ethereum will pump even less than Bitcoin pumped, or sometimes equivalent or less. But in this scenario, it's a good sign to see that we're actually seeing Ethereum pump a lot more when Bitcoin's pumped. So we need to maintain the structure on ETH Bitcoin. If not, it starts to get pretty bad. But it's still holding. So if Bitcoin does go under 80K, hopefully it can still maintain it and hold it. At this point, Ethereum against Bitcoin still looks good to me. So the last missing piece of that puzzle for Ethereum to pump would be Bitcoin pumping as well. If Bitcoin can start to rebuild structure and show some higher probability of pumping, then Ethereum looks all the better because of the structure between Ethereum and Bitcoin. All right, so Solana obviously doesn't look very good. I've been talking about how Solana doesn't look very good for a while here. If you guys followed the plan from Solana that I put out in early December, it's pretty much followed it exactly. Take out the lows, right? We had equal lows and we had equal highs. Take out the lows, don't fall off a cliff, means reverse to take out the highs. Take out the highs, but don't rally significantly, means reverse. At this point, Solana has printed. Kazaki just redeemed the ticker. Could you take a look at Sol? Yeah. It's a bit unfortunate timing, Kazaki, because I just pulled it up. But unfortunately for Solana now, you've got equal lows again. So you've got areas where a lot of people have the same invalidation. And depending on if Bitcoin breaks below 80K, this could be the straw that sort of breaks the camel's back on Solana. So if Bitcoin goes underneath 80K and we go for a free fall, Solana's going to fall off a fucking cliff. And the reason why I say that is not because I hate Solana. I'm just looking at the higher time frame structure. You have pretty strong bearish fluidity coming in on Solana, so the bears are sort of in control for the most part, and the bulls are trying to regain control at the bottom side of the range, but we've seen a front run so far. If we see these equal lows taken out on the lower time frame, and we see a hold here, that shows really strong fluidity, and Solana can actually go for a run, probably back to the top side of the range. Of course, we need to see what Bitcoin's doing at the time, but if Bitcoin's going sideways or Bitcoin's going up and Solana ends up dumping this local range but holding the high time frame range at approximately 110 a coin, then that shows strong bullish fluidity. We can certainly get back a lot higher on Solana. I'm not saying it's going to hit all-time highs if it holds it here, but it's a good start to rebuild the bullish structure here on Solana. And then we'll see after it starts to pump what happens on the top side of the range. But that's sort of what you want to see. This will be a decision point for Solana for sure. Because if it doesn't hold this, then you run the risk of that. And the reason why you run the risk of that, obviously, is because we went straight up. So there's not a lot of reason for people to step in and start bidding the market in these ranges, because there's no data that would suggest that it's a logical reason to do so. So that's where you could sort of see major slippage come in. I was finding significant success scalping the last couple of weeks, although I panicked and closed my short fully when we popped the top. If you had a short open on Bitcoin before we... Like, if you had a short open from like here, Tom, then closing it when we did this is not a bad move. You just have to look for new shorts after it fails underneath it again, which has been kind of hard to do. This one was the easiest one to grab, as most of you guys probably saw. Stuff right here was really hard because it happened so quickly, but this one was pretty slow, and you could see the imbalance of supply and demand on the locals. This one was a bit easier, but it's already hit good risk reward. So if you got the short position from here, and I can explain how you could see why it would be a good short position. I believe I did earlier in the stream, but if you did, you should already be sitting at pretty good risk reward. So it's not a bad idea to shave some profits, because we could see after liquidating a lot of the longs that came in for January, we could see a bounce back up to here to look for better shorts, or like I said earlier, a reversal from there. But either way, it's not a terrible spot to look for short profit targets. You should be at a good risk reward at this point. Anyways, that's Solana though. Just like Bitcoin and Ethereum, there is a path to recovery for Solana, but I'd have to see multiple instances of that low time frame structure actually holding it at this point. Because we have equal lows, I'm going to be even more stringent on that being a possibility for Solana at this point, unfortunately. It is possible, but as it stands, opinion hasn't really changed on it. In fact, it's gotten a little bit worse for Solana. Dogecoin has followed the fluidity nicely. Unfortunately, it tagged the second one, it didn't tag the first one. So we could see a nice little bounce, at least that's what I'm hoping for on Dogecoin. It went straight through the first one, but the second one you had a pretty good opportunity to grab it. So now we're looking for the highs that created it, pretty much here. And if we can get above there, we've got a bunch of equal highs on Dogecoin, which is a good sign. So there's not too much areas that I can see right now that would indicate that Dogecoin is going to dump significantly or run into a lot of turbulence. I think that's more likely to happen up here once we clear out all the short sellers. So you can see Doge going a little bit of a run. Of course, as long as Bitcoin doesn't just fall off a cliff. If that happens, then Dogecoin's going to do the same, just like any other alt. I know I say that all the time, but it's important to keep that in mind, because as you saw last week, Bitcoin dumped significantly, and even some of the alts that look good, including Ethereum, followed Bitcoin. Why would Bitcoin go straight below 80K and not hold 80 to... I mean, it's possible. We've seen equal lows hold in the past, but even if the equal... Like, you're saying, like, what if Bitcoin does something like this and starts to rebound? That's possible. I just don't like it because it's fragile market structure. So the same thing that happened here on Bitcoin, where, you know, it went up, back down, and then we had, like, the equal highs. That looks good to a lot of people. But the reason why I don't like it is because you can see that this second, the equal high that happened here, didn't run that much before it got popped. So you could find like a scalp here, like something cheeky, but it still a lot of time leads to that. So you're short here, we're getting validated on the next tick up, like next leg up. So like, yeah, something here could happen, but it leaves behind the same sort of fragile market structure where all the longs have the same stop losses and liquidations, which if it does bounce from like here, for instance, then it's going to be even worse when we go below it, because all of retail sees this as support and they'll all sell at the same time, including the leverage market. So there could be an opportunity here for a trade, but as far as a trade that's going to run to the moon, the probability of that goes down. And the reason why, and this is what I said last stream, right? If you guys were here, I said, you know, if we get daily closes back below and we see something like that, we run the risk of going underneath 80K. And I still believe that that's a risk at this point of going under 80K. And the question is what happens after that? Well, we got to catch it before it goes under 74. Because then we start to break the high time frame structure. So there would need to be some fucking something happening right here to save it, and then it can rebuild. But if it slips below this, the reason why that's bad is because that was the highs of of most of 2024. All these equal highs here, we popped the top. In this case, we actually held it. If you guys remember, it wasn't just an imbalance of supply and demand. We got really fucking close to going below it, but it saved it and we went higher. Now, if we do this again, we could run the risk of having equal lows again. Also, if we don't, we're going to take out all the invalidations and we could see something like this happen, right? So, yeah, it's not in a good spot right now. It doesn't mean that can't change, guys. It can change, but I have to see the structure on the local start to reprint. Like what happened here, right? Where I was like, oh, this looks bad. We have a bunch of insignificant equal highs. It looks like we could go under 80K. And then I started to see some things develop here. And then I started to see some things develop here. And I was like, okay, well, it looks good. We can go for the top now. We did eventually go for it, right? But it wasn't significant. So until I started to see stuff that happened here, and I can actually see the structure start to form again, the probability of us going under 80K is back to being a pretty higher probability because of what happened here. And the key word there is probability, guys. That nobody knows for sure. I can't say it's guaranteed to go under 80K or whatever. Nobody knows that. But as far as like that being a higher chance of happening, yeah, it certainly is after the last week. Not just because we dumped, but because when we did pump, we didn't fucking hold it. Obviously, there was a skirmish here where it was tried to be held, but that's not ultimately what happened. And we have to take the reality of what happened, pretty seriously. We can't just be like, oh, it's just, some news that happened, Venezuela or tariffs or there's a war, whatever people say, the reason why it dumped, that doesn't matter. It did dump, right? So we have to adjust based off of that and look in the structure based off that. And people want to know, why did it dump? Well, it dumped not because of any news or anything like that. There simply wasn't enough demand to match the supply after we took out the leverage market. Simple as that. Now, certain news could have some influence, certainly. Like news isn't going to have zero influence, but it's not the reason why we dumped. Even if there was bad news coming out in this area, but we had enough demand to match the supply, then we'd go higher. And then people would be like, oh, why did Bitcoin pump when there was bad news that came out, right? That kind of stuff. So sorry for the long rant, but it really does all come down to the price action, then visualizing who's in control. Is it supply or demand? And how can we visualize that? Well, we want to see when the leverage market gets taken out, what happens afterwards. So going back to Dogecoin, yeah, I think it's fine to pump as long as Bitcoin doesn't go under 80K. Dogecoin can have a little bit of a run here. This is still, I'd consider it equal lows, so it's not good. But equal lows, you can still have somewhat of a pump, and the fluidity was still held. It wasn't great, but it was still held. Some cheeky stuff happened here too. So you could see Dogecoin pumping for sure. Not to all-time highs or anything, but maybe above 15 again. Would make sense to hold 80K, create another equal low, sweep 90K, and then go to Goblin Town. I mean, that's possible, right? I just don't like to project that far out, because then it's really hard to do that. Like, it's really hard to say, oh, this is going to happen, and after this happens, then this is going to happen. I do it sometimes. But as far as like, taking positions and stuff, you really just want to look at, and this is some Skinner terminology, but A to B, right? So you want to look at like A to B. Once you start doing like, oh, then C to D to E, once you do all that kind of stuff, it gets really, because you'll get really attached to this schematic playing out. It's like, oh, A to B played out, so now C has to play out next, but maybe some things that happened in A to B should change your opinion on C being a higher probability of working out. Maybe the structure from A to B now looks a little bit even more bullish, and it looks like it's going to go even higher. So it's better to just map this out and then reassess where the next A to B is going to be instead of going A, B, C, D, E, F, that kind of stuff. So XRP had the retest of it, good fluidity. You don't really like to see these equal lows, but the good news is that at least in the spot market, we swept it, so that's a good sign. So XRP is sort of in the same spot as Dogecoin at this point. We could see a nice little pump as long as Bitcoin goes sideways or Bitcoin goes up. And similar to Dogecoin, there's not a lot of strong areas for bearish fluidity. So that's a good sign. It means that XRP and Doge could both see a nice little pump. And as far as XRP is concerned, just want to start scouting out equal highs. The sweep here is not great, so you can see a reversal here. This is where the first turbulence would come in at around 2.3. But if you don't see that, or it starts to get messy here, like you make equal highs, then you can go for a lot more on XRP. Tom says, my short was from the 93K local top. It was beautiful. I closed it when we popped to 91K. I figured hidden bull div on daily and 4 hour could have resulted. Let me see what you're saying. Because, Tom, most of the time, hidden divergence. So, let's see. You grabbed it from here. And you closed it here, right? Yeah, I mean, most of the time, hidden divergence isn't supposed to make a new high. It's supposed to just pop and reverse. But I guess in this context, it was a much bigger time frame at play with all the things considered, like this, for instance. And then the breaking of structure here, which didn't lead to a dump. So I can see that, but I mean, you did fine on it, right? You shorted here, you closed it here before this pop happened. Oh, you got the short on the way down, so you're saying you got it from here to like here? Yeah, I mean, that's still fine. It's a good trade, but there was an imbalance of supply and demand, so you could argue that you could either look to open up a new short or add on to the previous one once you see the imbalance of supply and demand. You have multiple positions on Bitcoin, so my average and unrealized P&L were merging and confusing me. Yeah, I mean, if that's going to happen if you don't take any profit targets. So what Tom's saying is, like, if you have a profitable short and you have a profitable long, and then it starts to get to like the midpoint between the two, then it starts to look a bit funky. But if you take profits on both of them and you just let them run, then you're in a better spot. Yeah, and remember, you don't have to fully close the position, right? If you have a profitable long and a profitable short open at the same time, that's like chef's kiss. That's perfect. So you take profits on both of them, and then you wait for one of them to go and start running. Obviously, one of them is going to close if the other one starts to run, but you could still manage to close that in profit as well. The perfect scenario in a market is to have a profitable short open with a profitable long, because then you don't care where it goes. Managing it is a bit tricky, but that should be founded in rules and not emotion. So you should have the preset targets already mapped out that you're going to stick to regardless of what happens. And honestly, in those kind of scenarios, it's better to just stop looking at the chart and let the plan play out. Because if you're staring at the chart in those kind of instances, you could start to manually close positions based off of feelings, and that can be quite detrimental. But it's really hard to fuck that up, right? Like you probably still made a good amount of money regardless, because you had a profitable long and a profitable short. I mean, it's really hard to fuck that up. So the super low chance of working out, so super low probability but super high risk reward, which was 69 by the way on Litecoin, got fucked. But I mean, it had a little bit of a run, but it didn't last very long. I told you guys, if something is 69 risk reward, it's not, the probability of it working out is super fucking low. I mean, you're risking 1 unit to gain 69 units. What do you expect, right? But yeah, as far as Litecoin is concerned now, we actually saw some decent divergence come in on Litecoin. It's really tight divergence on the daily, and then a little bit looser on the 4 hour. Unfortunately, it did come to completion, but it hasn't rejected after coming to completion. So what that means is you had a bunch of equal lows on Litecoin, right? You took them out, so a bunch of people selling at the same time, didn't fall off a cliff. And now we're looking for the high that created it. So with Litecoin at this point, it's testing the bearish side of fluidity. If we start to see it hold on the retest of the bullish fluidity, then yeah, it could definitely pop. So if you guys have been paying attention, that's 3 things that I think altcoins where I could see actually a pop happen if Bitcoin doesn't dump significantly. We're looking at, I mean, and this isn't just these 3. There's more than just these 3, but just so far what we looked at from Dogecoin to XRP to Litecoin, yeah, all 3 of them could do pretty well if Bitcoin doesn't go under 80K. Ethereum too, by the way, but Ethereum and Solana look a little bit messier, and that's to be expected because they're the bigger market caps out of the things I've listed besides XRP. But yeah, Doge, Litecoin, XRP could all pop, and there's more alts besides that could all do it. But still have to yield to Bitcoin as always, right? Is 300 RR decent? Yeah, that's pretty damn good, dude. 300 risk reward is fucking insane. Yeah, 300 risk reward is fucking nuts. So ADA followed the plan so far. Obviously, we didn't get the short retest on this, but the long worked out fine. It's a little bit messy like Dogecoin. It wasn't like the cleanest retest, but still pretty good. So same thing with ADA. At this point, we're starting to get, with the way that ETH and ETH against Bitcoin is developing, we're starting to get to a point where Bitcoin dominance could show a little bit of weakness. I don't want to say it until we start to really see it develop, but I wouldn't be surprised if Bitcoin dominance starts to go down a bit here. As far as the privacy coins go, Zcash is still trying to make a comeback, but I'm not convinced by it too much. You want to start to see the bearish structure break down, but honestly, I'm surprised that Zcash hasn't dumped more so far. And again, this is nothing against the Zcash community. Definitely don't want to piss off that community. They're diehard cult community. I'd rather see the number go up, but as it stands right now, Zcash, you saw the imbalance of supply and demand. You saw the failure back into range, and now you're starting to create equal lows. So if people have long Zcash for the last 2 months, they were either invalidated or they have the same invalidations. As far as it stands now, you haven't had a proper retest, which is a good sign. But first area of turbulence could be around 375. Next area of turbulence has kind of already been tested, but it was only the local test, so around 420. And then if you can get above that, you've got equal highs. So this is where the ultimate test comes in at around 480. This is where it sort of determines what the high time frame is going to look like. What happens there? I mean, it could pop. If it pops, then new all-time highs. If it doesn't, then new lows lower than 300, and who knows how low that could go. But so depending on what happens here will determine, are we going to get new all-time highs in the future, or are we going to go deep sea diving? And the reason why that's important, that area is important, is because Zcash dumped significantly for the first time after that huge fucking rally. We saw all the short invalidations start to dogpile in the same area. Short invalidations got taken out. There wasn't enough demand to match the supply after the price temporarily moved up there because of the arbitrage market making between the spot and the leverage market. As a result, because supply outweighed it and there was no backrunning from the demand side on the spot market, we fell back into the range. Now we're seeing something cheeky happen, like what we're seeing across the board, where they're trying to rebuild structure. So we could see turbulence here. This is kind of a really cheeky play, turbulence here. But the big one would be retesting where that imbalance of supply and demand happened, or where you could argue distribution started to take place. Whatever you want to call it. You can call it distribution resistance. I don't really care. But where we had conviction in liquidity, but still resulted in a reversal, showing heavy supply starting to come in around 480. And so if that supply continues to be an issue at 480, then that shows that the bears are in control, that distribution is in control. But if not, it means new all-time highs. So this is just the big area to pay attention to on Zcash, if it can even get back up there. I don't know, we'll see. Another big area, I don't want to be too bearish on it, but another big area is what happens underneath these lows. If we see something insignificant, like if we see something like this, then it can start to rebuild. But we don't know that yet. What we do know is what happened here. And now we're speculating on what's going to happen here. I'd rather just see what happened here, see the imbalance of supply and demand, expect the reversal. Whereas if this happens, then I can say, okay, well then we can wait for the reversal here as well. But I don't know. We have to see and wait to see what happens, because it did go straight up, right? Zcash went straight fucking up. Everyone was talking about Zcash on the way up. Now people aren't talking about it as much, but we'll see what happens. Monero. This is a tricky one, guys. Monero needs to see bullish price action soon, because this is a pretty straightforward thing that would that happened, right? You had all the shorts for the last, I don't know what, almost 10 years, 8 or 9 years, all the short sellers on perpetuals. in the same spot. Price went up, invalidated them, and then if we get that reversal deep back into the range, then Monero is going to be back to the consolidation for a pretty long time. Pretty shortable soon? Yeah, it's looking like that. Look at the difference between these two charts, right? So this is the Monero chart. Let me pull up the silver chart. I don't think this one has enough data, but let me just... Yeah, it does. Okay. So these charts look pretty similar. You see that we had equal highs, and this is even longer on silver. I mean, this is multi-decade equal highs, but you had equal highs on silver. And there's no perpetual contracts here on silver, so, well, there are some, but not a high volume. So this is mainly market psychology more. And then you have the same thing on Monero, right? What happened on silver is it popped the top and it held it. Popped the top and it's holding it right now. With Monero, it popped the top and it's reversed it. That's like the biggest. You can do this on more than just these charts, right? You can do this on a multitude of charts. But that shows you whether or not there's an imbalance of supply and demand. So in the first example on silver, there wasn't an imbalance of supply and demand. There's plenty of demand to match the movement on the price. The movement on the price on Monero, so far, I mean, it can still save it, but it's got a weekly close below. So far, it doesn't look that good. Anytime you have these scenarios where you have sort of equal highs, equal lows, support, resistance, whatever you want to call it, it's not necessarily like you could have grabbed a trade here or grabbed a trade here and looked for the short to get some profit, but ultimately a lot of the times it leads to popping it. And usually the closer we get to it, the faster it happens because people start capitulating at the exact same time. The ones that are betting against the market. The last one to capitulate is going to be the one that creates that giant wick. Hogmug redeemed a ticker hype. So hype, yeah, that's pretty rough. I mean, it's still, the good news about hype is it's still an exchange-based token, so it still has that steady demand that comes in as a result of that. Because of the perks and stuff you get for holding it and whatnot. I don't know too much about Hyperliquid, to be honest, but I know that it's got decent volume as an exchange, and I know that this is their token, right, or their coin. Looking at this chart, it looks pretty fucked, right? You've got pretty good bearish fluidity all the way back down. So next one would be here then, right? And then... see, equal lows, retested that. Okay, that's good so far. This was already done, that's good. It's done too. Sorry if I'm adding a lot of lines. I don't trade this coin. I look at it when people ask for it, so it's probably, I haven't looked at it in like a month or so, or maybe a couple weeks. Okay, so there's some good news here for this coin. So the good news, there's good and bad news, right? The bad news is, I'll start with the bad news. When we do test areas of fluidity, the market on the top side, the market has respected it, which means that bears are in control. And even on these local time frames, it's the same thing. Bears are in control. Now, the good news is, since they're already tested, right? Since they've already been tested, if we come back to them, the odds of them holding are a lot lower. The question is, can we get back to them? So the first step would obviously be testing this structure here, and we've already had some fluidity come in on the lower time frame, which is a good sign. If we can start getting back there, then it can lead to a lot more. But if we have to wait to see, because if not, then bears are still in control. So bears have shown control at this point, but most of the tests have already been done. So think of it like this, right? If bears are in control, and let's say supply is in control, then why would there be a scenario where price would return here? If there's so much more supply than demand, then why would price return? And this is around 25, 26 on 25, 27 on Hyperliquid. But why would price return there? Because if bears were in control, then we should see, or supply is in control, then we should see the continuation down. The second we start cracking the bearish structure, then there's a possibility of it reversing. But the big area to pay attention to, if we can do it here on the local, this would be this, because this hasn't been tested. The rest of them have been tested all the way up. This one has not been tested. So what happens here could determine new all-time high or deep sea diving. And let me use the magnet tool to be a little bit more precise, but it's around 32. Around 32 on hype. If the price can start reversing, that would be a decision point. And it has some room to breathe for the bears, so it actually could go all the way up to like 33, 34. Once you get to 35, that starts to be, because you got equal highs here. But so like from 32 to 34, if it reverses there, then you could start taking out new lows. If it doesn't, and it actually holds it here, then you can start challenging the bigger bear structure. And once you start challenging that, even challenging this at 40, you could see liftoff. You're just trying to see the supply and demand. So like even on Bitcoin on the 1 minute chart, right? So that shows bears are in control. And this is kind of hard to see on the 1 minute, but we look for the next one, which is approximately right here, which has been tested, right? Next one would be down here and here, which we're at right now, so that's not very important. But like if Bitcoin can manage on the 1 minute to get back to here, then you would have created equal highs and you're starting to damage the bearish structure. Then you could do the inverse, which is this, right there, and then you can go for it. And go make a high higher than this high. But the first step is to see if we can get here. If we can't get here, then we're not challenging the structure. It still shows that the bears are in control. But it's the same thing over and over again, depending on the time frame or the chart. It doesn't really matter too much as long as there's a good amount of leverage in the system. If these were individual common stocks, like penny stocks or something, the price action would be very fucking random. But hype and Bitcoin both have a ton of leverage behind them, right? I mean, even the precious metals market, like Bitcoin and gold and silver, both have a ton of leverage in them, so they're a bit easier to predict the price movements. So for the most part, most charts and most time frames, you can sort of get an idea. But the lower the time frame you go, the less it's likely it's going to be as consistent, and you still have to yield to the high time frame, but it's the same logic. The daily bull div on Bitcoin, yeah, this is, I mean, there's no daily, but it does look like it, and I don't, this kind of divergence doesn't look too strong to me. But send your chart over, Tom. Let me have a look at it. So like, I'm not saying take a long from here to here, right? I'm saying that if it gets back up to here and we see a rejection here, then this looks good. And we got a bunch of equal lows here on the low time frame that we could just take out. We'll see. But yeah, that's the hype chart. But a lot of these, a lot of hyperliquid like spin-offs, like what is it, Aster and the other one that you guys talk about, Lighter, their coins are getting demolished. I don't know if Lighter has a coin, I haven't looked, but at least Hyperliquid and Aster have both, their coins have been getting demolished, and people were so bullish on those coins. I mean, I honestly believe that they're going to probably keep going up, but it doesn't mean they can't go down too. And the reason why I believe that they'll probably keep going up is because they're exchange backed, right? So as long as the exchange is growing in volume, then it's likely that they'll continue to go up in the long term. Yeah, the 4-hour div on Bitcoin's a bit too wide. Honestly, the only play for Bitcoin right now is to long it, but it's not a great long because the high time frame doesn't look good. But you have the S&P that's rallying today. S&P probably going to make a new all-time high. Same thing with NASDAQ. Well, NASDAQ might take a little bit, but the stock market is likely going to make new all-time highs, and so that's going to help Bitcoin a lot. Even though the structure doesn't look good on Bitcoin right now, it could start to look better because it's being carried by the stock market. The 4-hour div is too wide, though. But the thing is, like, you could short here, but it's not necessarily a good one because you're already at the relative lows. Like, I know it's oversimplified, but you don't really want to buy high and sell low sort of thing. And what is high, what is low, it's all relative. But I mean, once you get to like the relative highs and you're at the relative lows, like the mistake would be like buying up here and then selling down here. Bitcoin isn't living up to the digital gold hype. Okay, it might sound like I'm bearish, like super bearish right now, guys. Let me make this clear. Bitcoin is not going to zero, okay? It's not going to zero. Could it come down here? It could. It could retest 60, 50, 60K. It's not going to zero though. Could it go even lower than that? It could go lower, but you have to zoom out and look at how much Bitcoin's actually done. I don't want to cherry pick metrics, right? But if we're just looking at the origin of when these things started to be traded by the public, you can't beat the ROI on Bitcoin. And not only that, but if you're going to go up a lot for a long period of time, there's going to be downswings. Even if the stars align for Bitcoin from like a policy standpoint, so say like obviously the American administration right now that's in office is very pro-Bitcoin. A lot of people are very bullish on Bitcoin. You have the ETFs, you have a lot of institutional money coming in. All of those things happening doesn't mean that it goes up forever and doesn't ever go down. It doesn't matter what the financial instrument is. It will go down at some point. And when it does go down, it doesn't mean it's not going to go back up. And the other thing is, has it? I mean, yeah, it's gone down a good amount. But if I zoom, like I was zooming out here, does that look like it's that significant? If you've been in Bitcoin for a while, you've seen stuff way worse than this. I mean, look at this one on the chart, or look at this one. Way fucking worse. But, you know, there's, every time it does that, every time it starts to correct, everyone's looking at whatever else is going up and saying, oh, well, Bitcoin's dead and this is the new, everybody's going to silver, everybody's going to gold. I'm sure there's a lot of rotation in silver and gold, and there has been, but it doesn't mean Bitcoin's dead or it's going to die. The same thing for Ethereum too, right? Like Ethereum went on such a monster run, and the reality is, yeah, it hasn't really moved for fucking 5 years, but look at it relatively. It hasn't done this, you know. So yeah, I might sound a bit bearish, right? Like right now on Bitcoin, but that's just the structure that we're looking at right here. I'm not saying, you know, that Bitcoin's going to zero or it's never going to come back up. I'm just saying that in the short term, we saw an imbalance of supply and demand. There's a good chance we could go under 80K. That's it. But as far as will it ever make all-time highs again? Yeah, it'll likely make all-time highs again. I mean, I think it's pretty much inevitable at this point because of legacy. Once a financial instrument has been around for 15 years and has reached 2 trillion market cap, I mean, it's pretty fucking hard to see it go to zero, because the lower it goes, I've said this before, and this is applicable to any financial instrument, but more importantly, the things I just noted, the 15-year existence and the 2 trillion market cap, but there will be unknown demand that hits the market. I'm not talking about meme coins or a lot of the shit coins out there, but people might not be interested at bidding Bitcoin at 87K, but if I should use this as an example. I think I've talked about this before, but when Bitcoin was here, right, and everybody was panicking, this was in the summer of 2024. When this happened, we started to see new buyers come out of the woodwork. I mean, I gotta tell you, I've never seen the fucking icebergs dogpile in like they were dogpiling right here. It was insane. And you had Europeans' biggest hedge funds start to bid the market. You had all these new buyers and bids coming in. But you can't assume that all that was going to happen until this happened. You don't know who all these new buyers are, who's going to start showing up out of nowhere and wanting to pick up Bitcoin until the dump actually happens. Like if we were just looking at what the order book is right now, yeah, it's pretty thin. But it gets thicker depending on the volatility. Like the the outer bounds get thicker, not necessarily the market making, but here's an example that you can see on the order book that happened in the last couple weeks, right? Bitcoin pops the top, and the order book down here is pretty much not really showing much, right? I mean, there's this one here, but that's about it. So the order book is sort of voided here when we're up here, and then price starts to dump, and as price starts to dump, you got new bids that start popping up. Same thing when Bitcoin was down here, right? You don't have a lot of sellers. It's sort of a void except for this one here. And then it starts to pump, and now you've got all these new sellers that pop up. So, and as far as referring to your volume thing, that's partially true. Volume is lower. I think it's a mixture. There's a mixture of reasons as to why volume's lower. You have the ETFs, right? And then you also have a different market participant this time around on average than you did in the past, which was the market participants in the past on Bitcoin, very much retail, very much active market participants who would quickly buy, sell, scalp, right? This time around, you have more institutions who are, the way they played the market and the reason why it's worked, the way they played the market is buy and hold, right? You look at institutions, they buy and hold, and they hope that the dollar loses value through inflation, because it always has in decades now, and the price will go up as a result of that. The same people that are getting into Bitcoin, they're not just buy, sell every day like it used to be. So yeah, volume's tapering off quite a bit. It's not to say that we can't, I guess to put it simply, it's not to say that we can't have a big drawdown on Bitcoin. We certainly could. But I don't think it's going to kill Bitcoin. I think Bitcoin will make a recovery. It could just take longer depending on how bloody it gets. But yeah, man, I think it's definitely possible you get prices under 80K. I definitely see it as a possibility. Certainly with what's happened in the last couple of weeks. Speaking about that, let's have a look at MicroStrategy, which hasn't dumped as much as you would have thought at this point, right? Because it had a pretty huge reaction for most of the dumping that occurred on Bitcoin, but not as much this time around. The structure doesn't look that good, though. I mean, it's decent fluidity so far, but it could, yeah. It's just going to follow Bitcoin. Apparently, Sailor, how much Bitcoin did Sailor buy these last couple weeks? Like 70,000 Bitcoin or something? I might be overestimating that. But I think that's an important thing to note, is that even if you have a big player come in and spike the demand or spike the supply, it doesn't really change the chart that much. And this goes back to talking about news and stuff, right? Like, news can have influence, sure, but it doesn't, the ebbs and flows of the market and how it behaves from a supply and demand on a grand scale, there could be influence from big players, there could be influence from news, but most of the time it's going to follow what the chart says, more so than anything else. And the chart is, all you're trying to do when you look at a chart is you're trying to see what does the supply and demand look like. There's different methods, or different methodologies of figuring out how to read supply and demand. But I think with Bitcoin in particular, more so than most other financial instruments, the easiest way to do it is use the leverage market to your advantage. Because these moves that happen a lot of the time, where you see a reversal, in most markets that are leverage based, when you see a reversal, it's usually due to the leverage. And then you can open up your own leverage position betting on the other side. All right, Tom sent a Bitcoin chart. Let's have a look. Yeah, that looks fine. The 4-hour bull dip is a bit, it doesn't look that clean of a bull dip to me, but you're not really playing off the bull dip too much. And yeah, this got swept, but not as deep, right? That's correct. This one, you might just get this part happening before you get the sweep into liquidity. That is, but if you do see the sweep in liquidity, that means that there's less fluidity from the bears. So the short, the probability of the short running like super far goes down because side is looking a bit messier. So if you want the short to really go the distance and maybe go under 80k, you don't want to see the sweep happen. But if you do see the sweep happen, it's still a decent short. Just don't be targeting under 80k. And this is good, but diving to the bottom of this red box could get a bit spooky. But that's fine too. Potential sweep and rejection. Yeah, you might get a rejection here, but the better spot to look for is right here where you already had the sweep and reversal. But yeah, like a scalp here, it would be fine too. That's a good chart. It's a good chart, Tom. Why use MEXC chart? I guess they trade on MEXC, I'm not sure. But be careful with MEXC, by the way, guys, but you guys can do your own research on that kind of stuff. I don't know, what does the chat think? Do you think Bitcoin is more likely to go under 80k or more likely to go above 100k? Put a 1 in the chat if you think Bitcoin is more likely to go to 100k first, or 2 in the chat if you think Bitcoin's more likely to go under 80k, because we're kind of at the midpoint right now. Do a prediction? Well, the prediction would last forever if I did a prediction. Okay, so the chat's pretty mixed. I mean, either one could happen, right? Either one could happen. So I think if you're really bearish at this point or really bullish at this point, I would just challenge you to try and see the other side. Because as you can see by the chat, it's pretty 50-50, right? So I don't think you should believe that it's 100% going to go above 100k or 100% going to go below 80k before the opposite happens. Of course, at this point, obviously it looks pretty bad, but it could look better over the next week. The low side is more stacked. Yeah, that's also true, right? You haven't taken out this stuff on Bitcoin yet, but you've taken out the top side stuff. That's usually how it plays out, by the way. Usually you take out the top side liquidity. If you don't see that, then you go for the bottom side liquidity. And then I forget who said it in the chat. Might have been you, Chris. Trying to scroll up, but it was a while ago. In terms of it like bouncing off here, yeah, that could happen. And one of the reasons why that could happen is because we didn't spend much time down here. So it's hard to reason that there's a lot of invalidations here. But we did spend a decent amount of time down here. So a lot of people had the opportunity to have the same position. But if you see this with the equal lows, it's actually not that bad of a sign. Let me see if I can draw you a diagram. So if you see the market sort of consolidating in a range, if you go for the highs first and then you hold the lows, then it's usually bullish. If you see a market consolidating like this, same thing, right? But you go for the lows first and then you go for the highs, it's usually bearish. The reason being is because in this first scenario, you've taken out the short liquidations and you've taken out the long liquidations as you revert back to the mean. So both sides have been taken out, but you've taken out, basically if you take out all the short liquidations, right, and you don't see this, then it's just a play on liquidity. Same thing here, you take out all the long liquidations and then you go for the shorts and you don't see this, then it's just a play on liquidity. So the order in which you do it has some significance in it. It's not a guarantee, but usually if you see top side taken out into bottom side, then there's a chance you could pump it. An example of this is actually what happened on Solana. It hasn't played out completely yet, and it could be changed, but you see how we had sort of that consolidating market where you have equal lows, equal highs. You take out the bottom side, you go for the top side. You take out the top side, it usually means this. The only difference here on Solana is that it's going to follow Bitcoin. So if Bitcoin pumps like crazy, then these technicals aren't going to come to fruition. But if Bitcoin shows any weakness or starts to go sideways a bit, Solana could dump, right? But regardless, like, of what happens after, at least you can look to long here, you can look to short here, and then when the price is like sitting here, you don't really care if it goes up or down. Like your longs here, most of you guys have probably been invalidated. Shorts here, now you just want them to run. But regardless, you can still take profits on both of them. Because all you're looking to do is take out the invalidations, and see if there's a reversal. If this would have happened here, there'd be no opportunity to short it. If this would have happened, there would be no opportunity to long it. Too many people on 100K, so I'm expecting a front run dump. If you're expecting a big dump on Bitcoin, you can look for the next time it pops up, right? You can look for the short. It's the same thing that happened on Zcash, although Zcash didn't have the cleanest retest. But on Zcash, you had equal highs similar to Bitcoin. You pop the top, you reverse back in, you look for the retest, and then bang. It doesn't mean that you can't have like more pop-ups on the way down, but regardless, Zcash is actually one of the few that might decouple from Bitcoin. But like I've said a million times in stream, and I'll continue to say it because it's important. If an altcoin looks like it's going to do something based off of its price action, it'll still follow Bitcoin if Bitcoin gets volatile. So really, before you even, like, say you want to trade altcoins, right? Before you even start trading the altcoins, you have to come up with your own conclusion of what you think Bitcoin's going to do. If Bitcoin looks really bearish, you can even argue it's better to short the altcoins because they're going to move even more as long as there's enough liquidity to get in and out of your positions with minimal slippage, which Ethereum is a great instrument to do that if you're on a bigger account. And same thing if you're bullish. Now, it's a lot harder to grab long positions on altcoins when Bitcoin's bullish because you'll notice with altcoins in the lower time frame is they'll do this kind of stuff where they'll keep taking out lows and lows and then they'll finally pop. So like, you can get stopped out a couple times before it actually fucking moves. But generally speaking, that's true on anything in crypto. As far as fluidity goes and trying to get like a sniper position or trying to get really good risk reward, it's almost always easier to do it on the supply side than the demand side. So what that means is there's more rhyme and reason to the price action prior to a dump than there is prior to a pump. As far as why that happens, I can speculate on that. I'm not entirely sure, but just historically, that's generally how it's been. Alts are too beaten down to short. Okay, well, if you believe that and you're bearish on Bitcoin, what could you do, right? If you believe that alts, it's too late to short alts, but it's a good time to short Bitcoin, well, you can use that as a hedge. You could short Bitcoin, long alts. Now, normally that is not a good approach because, like the reasons I've stated before, they're pretty much coupled together, right? If Bitcoin dumps a lot, alts are going to dump a lot. But every once in a while, and this happens usually for only a couple of months, every 3 or 4 years, altcoins will actually decouple from Bitcoin and they'll pump on their own. And they pump like crazy, right? For those of you in the chat who've been around in crypto for a while, you've seen this happen a couple times, or at least once, where alts just go on a fucking massive run while Bitcoin's not doing much. The question is, when is that going to happen, right? And all we can do is keep watching the behavior between Bitcoin and Ethereum, because pretty much since late summer last year, Ethereum has shown signs of slightly doing better against Bitcoin than it has in the years prior. So it's hard to say when exactly it's going to happen, but we keep seeing more and more signs of Ethereum potentially leading the way for the altcoins. Usually it'll be really fucking obvious when it happens, though, so it's not necessarily like you need to FOMO in because you're thinking it could happen tomorrow or something like that, but it usually lasts for a couple months, so they'll be able to see it on the ETH against Bitcoin. Alright, boys, I'm opening up marbles right now. The last time I was streaming, we were supposed to do marbles, but it got cut kind of short, so... I don't see the hype for marbles. You guys ask for it all the time. Where's the hype? DCA on spot? Yeah, you could do that.